A very good chance that we see one. Let's see here. What do we got? Well, way beyond the expected move once again. Big spike in vol. Looks like I might get it this week. We'll see. Um, we fell into the long-term trend from October of 2023 out here on futures. This is a pretty significant range to fall back into. This is also a drop below the monthly open, and a technical reversal on the monthly, weekly, and daily for SPX, which we can look at out here. In addition to being a test of the 50 MA and a drop below the 30 EMA, which are they're important triggers. But if we go out to the monthly, this is fairly significant, right? Because we fell below the month where we opened for the month of July, and we now have a reversal. So this is the first step of that reversal. The next really important level is going to be like around 52.64. Um, there's a little bit at like 53.41. That's going to be like the May high. But really falling back below this 52.64 mark is where we would look for maybe the month to end, right? And so that could actually happen as soon as the next couple of weeks. It may not, like, well, next week and a half. It may not, but even if it doesn't, the next month is going to open on a bearish trend, right? And so the presumption for the next month's open is going to be pretty bearish. Out here on the weekly, we're still a little bit off of that like 20 MA, but we have reversed, right? Like this is a very clear reversal. Maybe we look to 421 for a little bit of a confirm there, but I'd be more interested in clearing down here at like 5191, and then that 5341 level right here in between is pretty important as well. So we'll be looking towards that. Any breakdown below 490, like this is probably where we start to look for a really big correction below 49.53. This would open up, a move back to the long-term trend around 4600. So, but this is very bearish. This is a bearish reversal. We've confirmed it. It's going down. So let's see what happens. Commodities ended up failing into the end of the day. Anyway, I think gold sold off a little bit after kind of peaking a little bit through the midday. Looks like oil still held up all right. Copper and silver selling off pretty hard. Dixie bounced back a little bit after the auction, but not much. And maybe this is reversing. And I think if we see higher inflation expectations, we'll see dollar and yields move up pretty sharply, especially given that we've gotten a little bit of steepening, right? Correlation still breaking down at a very rapid pace now, and getting pretty close to the June high on the 1 month correlation. What's more interesting is that 3 month correlation is the highest it's been since we recovered out of the April correction. And, this means that the forward expectations for volatility are, kind of increasing on indexes, not just at the 1 month, but very rapidly over the next 90 days as well. Forward yield on volatility ending the day around 6%, positive 6%. That is above the Fed fund rate. That is above the risk-free rate. That's very attractive to anybody wanting to go long volatility. And I expect some pushback on that if GDP inflation expectations aren't aren't very elevated. And then we'll probably see more of the carry trade fall off. But leverage on the carry trade did pick up today. We did get a lot of out of the money put selling. Some of that squeezed off into close, but not all of it. Bond vol probably up a decent amount today, considering bonds swung so hard, but we'll have to see where that lands. Definitely a big move up in 3 month correlation, which is now finally catching up with over the overall increase in bond volatility that we've had since like May 28th, right? Tail risk hedging is picking up pretty rapidly. So we're definitely getting some put buyers coming in and starting to leverage the downside, and put buyers tend to move the market down very quick. Forward dumping too, awesome. That's what I like to hear. 69% of the S&P above its 20-day moving average. This could fall off pretty rapidly from here, and we already have a pretty big slip over the last couple of days. And if this starts to really drop, like back below 50% of the index, we're probably going to see the majority of that positioning that had moved into breadth sell, right? They'll no longer be above water, and they'll probably start to sell off, I would imagine, pretty quickly. Correlation between cash VIX and VIX futures spiking really hard today, up almost 10%. We are starting to see that turnaround and move significantly more positive very quickly, and that's bearish as Fed fund futures didn't really do much today. They priced out like 0.10, 0.1, 0.1 of a bip. They're still pricing in like 100% chance of rate cuts in September. If this gets surprised, though, that's going to be catastrophic, I think. Yeah, and so that's where we're at. I hope everybody made a bunch of money today. I think the setup was pretty well telegraphed. And if you didn't, there's always tomorrow, at which point I will see you all later.